Everybody, welcome to the morning market briefing. It's Monday, June 29th, 2026. Hope you're doing well out there. No call this upcoming Friday, July 3rd. Market is closed in honor of America 250. So big week, short week ahead. Let's jump in with energy, Ben, because we got a number of storylines having a bit of an impact, not the least of which is our dear friend, the Strait of Hormuz, really slowing down there as this deal continues to not deal.
Yeah, this kind of started Thursday night when Iran tried to attack a ship that crossed the strait close to Oman, which was not approved, and then another one carrying oil from Qatar. The U.S. responded with attacks on Iranian communications, drone and missile sites along the coast, and then Iran attacked Kuwait and Bahrain. It was gone back and forth. They were supposed to meet in Switzerland, but these talks stalled due to the fighting. And so now it looks like, because markets are open, cooler heads are apparently prevailing, and there are going to be more talks potentially in Doha later, beginning tomorrow, actually. So it seems like both sides are tentatively agreeing, but the fly in the ointment right now is Lebanon. Israel and Lebanon have agreed to stop fighting, but Hezbollah has said, we don't agree. And so
no way.
So this all creates what is a bit of a quagmire. What I would say is that for the markets, oil is still low, which means oil is still getting through the strait. Enough oil is getting through the strait. And that, as far as the markets are concerned, that's good for markets. But it doesn't help confidence.
No.
And certainly doesn't help that premium that may exist in oil for some time, just because of the uncertainty about will they shut it down or won't they.
Mm-hmm. Yeah, it's interesting, and I think I'm curious if we continue to see these little spats, how effective the distancing will be for Trump and others as the midterms come due. It's if you get that buffer that you alluded to, Ben, that keeps that premium and keeps oil up elevated somewhat, then I think there may be growing angst about what's the actual long-term solution. If you can keep things relatively peaceful and oil continues to trickle down, I think it kind of goes to the back of the news cycle. But as long as we're getting attacks, it's going to stay there.
Yep.
And elsewhere in the energy space, Williams making a $5.5 billion deal for Momentum Midstream. This is specifically East Texas and Northern Louisiana gas flow.
Yeah, there's a really gassy plays.
Hicks knows about that.
So it's not the Permian's a little bit more oil rich, and that's more on the West Texas side. But then East Texas, Louisiana, that's very high natural gas, which is typically something that I've really tried to stay away from as an investor, because you produce a lot of the gas very quickly, but then it all burns out very quickly. So when you frack a new well, so it's not a great business to be in, but we do have a lot of gas here in the United States, and the companies that move that are going to do very well. I continue to think that gas is going to be what powers a lot of these data centers, not nuclear. Nuclear is a lot more risky, a lot more capital intensive. You really have to commit to it for a very long period of time. With gas, you just drill a well, gas comes out, and now with these midstream assets that are consolidating, a lot of the benefit is going to accrue to the people who can take that gas and actually take it to the place where it's needed. And I think that this is very smart from Williams. The problem for us is that a lot of these are structured as MLPs, which make it very difficult for us to invest in unless you really enjoy getting K1s.
Yeah, and if you do and you're a client, I'd love to hear from you, because I pretty much exclusively hear the opposite. And there's nothing I enjoy more than hearing from a client that's upset that they're waiting on a K1 and it's on a position that we don't own. So shout out to you guys.
And the other thing is, there's just nothing really that's well suited for public investors, because they're MLPs. It basically means that you're the bag holder. So when Williams wants to go and acquire Momentum Midstream, they will issue more stock, which you, bag holder, have to stump up the money for, and then you get your 7%, 8% preferred return as a result, that dividend in that form of the K1. Meanwhile, there's another entity that's has the equity piece on that. So it's really ends up not being a great investment. You think it would be, but it's difficult to really invest in and make a lot of money for public investors.
And I think that AMLP ETF is still credited with being the most litigated and money-losing ETF of all time.
Yeah. They used to advertise on Bloomberg all the time. Sponsored every segment. I think CNBC as well.
Yeah, I mean, the MLPs are huge in like 2012, 2014. And I don't know anybody who successfully navigated that and made a ton of money. It was all just, I get an 11% income stream and then 30% losses every year.
Yeah. What a trade.
I mean, even KMI, which is notorious for having a zillion different tickers, just glom the whole thing back together. And we're like, we're just going to run as one company because this is a nightmare.
Yep. Well, speaking of splitting up companies, Comcast, they're going to spin off NBC, Universal, and Sky. We're going to get two distinct companies. The market says two companies better than one. It's up 20%.
Yeah, maybe this is just getting Brian Roberts out of the way, who's been the CEO of Comcast for a very long period of time and kind of driven it into the ground after getting the job from his dad. But I think that in this instance, it's probably good. I remember it was probably 10 or 12 years ago when everyone was saying content was king and you had to buy content. So AT&T bought HBO, DirecTV, and Comcast bought NBC Universal, and they were just going to take over. And now neither of those two things happened anymore, and they've all kind of disaggregated. And so NBC Universal is going to be NBC Universal. No longer is Comcast going to be running the theme parks in Florida, for example. And then Comcast is just going to be the cable company. Both are going to be led by current and former CFOs of Comcast. So no no operational expertise, but financial expertise, which I think is interesting. So the current CFO is going to take the reins of NBC Universal, and the previous CFO is going to come back and become CEO of Comcast.
Which I think specifically is, if you think of the Comcast business, having a financial operator in charge of that actually makes a lot of sense.
Yeah.
I might have concerns about someone that hadn't been on the operations side running the parks, for instance. But for Comcast specifically, new Comcast, it probably makes sense.
I agree. It's a classic capital investment. Invest in an asset and then harvest returns.
Memory chips, man. Wheels are starting to get squeaky. People starting to get creative, starting to think about different options because prices are too high.
Yeah, I mean, we talked about this last week, how Apple doesn't like not controlling everything. And it didn't take long after Micron reported and price increases coming through for Apple to say, you know what, we need to find other solutions. So I guarantee you they're probably also looking at insourcing memory chips. But for right now, they say, well, there's a big Chinese memory chip supplier. They're currently blacklisted by the United States, but we're going to lobby the Trump administration to allow us to purchase. And they're going to do the guys under affordability.
Yep.
Because it's going to lower electronic prices for people. And I think that might actually sell with the administration.
Yeah, I'm curious to see how that plays out because on one hand, the affordability push, the timing could not be better for it, as we just alluded to, with, potentially gas prices not coming down quite as much as people might want them to. Got midterms coming up. A win on the affordability crisis would be politically motivating for a lot of people, but at the same time, do we want to de-blacklist something that was giving great concern previously? I don't know. What's the move there, Tommy?
I mean, they've got to do something. Either that or you've got to have more amenable companies like Micron, but I think they're really enjoying their rise to prominence in the last few weeks. I don't know. I mean, you always hear those things about there's Chinese chips in, windmills and electric grid things that have, secret backdoor hacking abilities where they could shut down our grid at any moment if they wanted to. Obviously, that would be a concern Is that a thing in these? I wouldn't claim to know, but I mean,
it does seem
certainly
like
wouldn't put it past them.
Seems like it would have happened by now.
Yeah. I mean, the argument, too, is like, are we going to, if we're making America great again, are we going to pay China a fortune so that we don't have to pay a fortune to our own companies? You know, that's the depends on how you want to cut that cloth, really.
There's also a lot of investment coming in globally on memory chips. Korea announced something that's going to, this, I don't think for the last time in my career I will use the term quadrillion, but they're expecting to invest up to 2 quadrillion Korean won in memory chip supply over the next decade. So Samsung and SK Hynix are going to be big parts of that. In U.S. dollars, it's going to be over the next 5 years about $500 billion in new capacity. So that's a lot of capacity that's coming on board. Micron better make money while it can. Yeah, that's what I'm saying.
Yeah.
Abbott, meanwhile, looks like they're going to survive the criminal case with the baby formula.
Yeah, this has been a story that's been going on for years and years, and I think this is the Trump administration's priority to settle things civilly and not necessarily criminally through the DOJ, and just kind of like, let's just move on. I think there are two sides to that coin, but Abbott, I think, have been rallying a little bit in response to this. It's still not fully out there in terms of all the details, but Abbott, provider of baby formula, its factory had a bunch of bacteria in it. A couple of infants died. The bacteria they couldn't trace directly to that factory. So
Allegedly.
it had been going on for a long time, and so now we're just kind of turning the page on that.
Tom, let's talk about the Fed a little bit. It does seem like we're starting to see them express some willingness to play ball with Warsh and a little bit more dovish commentary as of late.
Yeah, we heard from John Williams, who's the New York Fed president, and he's starting to move towards the force, to use some nerd culture, but he's starting to move away from the dark side and acknowledge that they were potentially wrong that oil was going to spiral out of control and that we were going to see years and years of higher inflation. And he's acknowledging the fact that the current rate environment is restrictive. So even if they don't do anything, I mean, I think the hikes is the thing that everyone keeps talking about, and we still have at least one hike priced in for this year. We don't necessarily have to hike to bring inflation down because we're going to see the natural flow of the oil is down. Whether or not the Strait of Hormuz is open or not open, or there's missiles being fired, the current price of oil is virtually round trip back to where it was before. And so that's going to have a major impact on the next few prints. You know, he acknowledged that rents are coming down. I would still say that data is ridiculously high relative to reality. And so I think the medium expectation is you're going to start to see some of these people be convinced by Kevin Warsh's, I mean, I would argue data-driven and correct information, and start to say, hey, maybe we were wrong about all this. Maybe the potential for hikes is not necessarily on the table, and maybe we need to just modulate effectively towards the end of the year. So, I mean, I still very much am in the camp that we will see a cut this year, if not two. But, I mean, suffice it to say that the markets have moved as they should have. As inflation rose, which was transitory, and we don't like to use that word, they self-modulated. We saw the 10, the 2, the 10, the 30-year sell off quite a bit, and that creates a restrictive environment. And now that we're seeing those things come off the board, they should come down naturally as well.
I'm starting to see new pragmatism or stoicism come into the Fed, just in these comments that we saw from Williams and Barkin, Tom. And I'm wondering if you think that was an influence. I felt like previous leadership got very jittery after the big inflation spike. I feel like they were previously, I do think Jay Powell was previously fairly stoic in his approach to interest rate policy. And I think after he got kind of undone by inflation the first time around, it was like this, he had caffeine jitters, and so did the rest of the committee for a while. And I wonder if Kevin Warsh is kind of installing, hey, new face, we turn the page. Let's actually think about this, because all of this commentary is actually thoughtful and talking about where is underlying inflation and where is it going. And that's not what we were talking about 6 months ago. It was, what was the latest print?
How do we get Trump off our back? How do we stick it to him? You know, and you start to spiral, and what is important leaves the discussion table. And I think it's also, you know, you are the average of the 5 people you spend the most time with, and then if your job is now suddenly to spend time with Kevin Warsh, you're going to average him in as well, you know, and he's got a very particular way about him that's extremely dry, and this is what we're doing. This is the goal. We're not doing anything else. And I think that that's a real change from having Jay Powell being the center of the universe of the Fed. And so I expect good things, at least in the short term. But I mean, to your point, when stuff happens, people can get rattled by that. People are still rattled by the global financial crisis, and you kind of have to eventually move away from those things. But people get burned by something once, and they are constantly looking for that ghost behind their shoulder for the rest of their life, oftentimes.
Yeah, it's a real impact, and I think the jitteriness is a good way to put it. I think it often vested itself as borderline paranoia. It felt like
it's like when you get in a car accident and then you're riding shotgun and you start looking for the brake, you know, for the next 6 months because you just you know what that feels like and you don't want to do it again.
The rest of this week we'll get some economic data coming through. The BLS employment report will come out on Thursday. We'll get consumer confidence this morning, JOLTS job openings. We got the end of the quarter coming, a few earnings just kind of trickling through. Hear from Kevin Warsh on Wednesday. So plenty going on, but I would imagine we'll see a little bit of a trail off in trading activity later in the week. I think that, not from us, just market volume in general. I think once you get through the end of the quarter and holiday weekend, hoping for a relatively calm Wednesday, Thursday, but we'll see what happens. I probably just jinxed it. So, all right, we'll wrap it up there. We'll be back tomorrow. Y'all have a great day.